Hello, I'm Michael Ryan with Michael Ryan and Associates. For 35 years, I've been providing financing options and strategies to investors throughout the country. This week, I get a regular question on how does my financing investment property, how is individual financing going to be affecting my long-term strategy? So in general, with folks I've already been working with, this is for me, really an early on conversation as we're laying out these stepping stones all the way through. But oftentimes I'm meeting new people and it's more midstream on what's going on. The good news is most investment steps that we make create positive impact on your future financing strategy. Contrary to some of the lending that that was done in the marketplace during what I term the go-go years before the financial meltdown in the 03 to 07 range. Back in those days, we were able to finance properties to where, frankly, the loan you were getting had negative cash flow. You were having to basically feed it every month. You had rents coming in, but the rents were not sufficient to pay the bills. We do still need to look at that in the aspect when we're doing conventional loans. So we're looking at those 30-year fixed rate loans. You get a fourplex where we're putting 25% down, a 30-year mortgage. The easiest way to figure if the purchase, the carrying of the property is going to be plus or minus on your strategy is you take 75% of the gross rents minus, we use the term PITI, principal and interest, your mortgage payment, plus a monthly calculation for your property taxes and a monthly calculation for your insurance. Very often, this is what comes out on your taxes. So if that number is positive, it's actually going to be adding to your monthly income. If the number is negative, the way I like to easily consider it is I call it another car payment. You just bought a car for your kid. You have a $300 a month negative cash flow on this property on Main Street. It's like, okay, you went out and helped your child buy a car and you have a $300 a month car payment. So we take that into account on your global, on your overall personal debt to income ratios. So we're always looking at this as we go through. And also, the longer we hold an asset, generally the better these numbers get. So that is, in a nutshell, how financing, as you're bringing on additional properties, can be impacting your long-term financial strategy. We're always looking at these pluses and minuses and just tracking that all the way through. So thank you again for watching. Love to have further questions around this. Give a call or email and let's start a conversation. I'm Michael Ryan, Michael Ryan Associates, and you have a fabulous day.